Hi, Jonathan York from Bay Financial Partners, looking at investment market. Certainly the Dow Jones had a pretty wild ride, coming off its highs of nearly 27,000, back down to around sort of 25,200 odd. But it's still sort of quite interesting to look over the last 12 months. The low was around 23,200. Being certainly a pretty nervous and volatile month for equities. So looking at it over the last 12 months, it's still got a healthy gain, but obviously the market is, sort of very nervous. There's a lot of sort of global uncertainty out there, most notably obviously with the trade sanctions. You also obviously got this ongoing spat in sort of Middle East in terms of Saudi Arabia and the disappearance and the subsequent murder of the journalist. And then on top of that, we've got earnings as well. And certainly at the moment, the earnings are maybe a little bit disappointing. But it's just going to be interesting to see how it sort of plays through once all of the sort of major corporates in the US do report their earnings. Certainly at the moment, you probably would just sort of view this as a reasonably healthy correction. What could be interesting is that, if there is a little bit of selling pressure out there, certainly with a lot of this sort of passive investing index funds sort of coming through, just going to be interesting to see how that sort of plays through, because if you do start to see those sort of withdrawals coming through, then it really does become a bit of a domino effect, because as more money's taken out, they have to sell more shares. That takes the price down, more money comes out, and it just sort of builds on itself in terms of momentum. Then, of course, we've got the political situation, as we head into the US midterms. President Trump, up to his usual tricks, came out the other day and sort of announced a potential tax cut for the middle income earners. That was sort of quite interesting as far as his party was concerned, the Republicans and Congress, there's no work being done on this, but he comes out and just makes a broad statement that, they're working on that, working very hard to try and get that through before the midterms. Again, that's quite a major sort of policy shift and policy implications for the Republican Party. If you were cynical, you're just saying just trying to sort of win a few votes and just trying to get his party across the line in the midterms. What certainly is quite interesting is that, the Fed really haven't changed their sort of view. They still view the US economy as pretty strong, and certainly it is still pretty strong. You look at the data coming through, unemployment, historically low levels. Growth is reasonable, and just starting to see a little bit of a pickup in inflation as well now. Quite interesting with oil, though. Most people expected with the sort of Middle East sort of situation at present, and a lot of pressure on Saudi Arabia, that oil would look to spike higher. There was talk about $100, $200 a barrel. Sort of quite interesting though that this morning oil has really fallen quite majorly, down just over 4%. settling around $66 a barrel. So really quite an adverse reaction, and when you throw that into the pot with the sort of the Iran sanctions, you then potentially got sort of Libya and Nigeria sort of holding the key to where sort of oil will trade over the next sort of 3 to 6 months. Brexit still rumbling through, and quite a major protest in the UK at the weekend about holding a second referendum, as sort of the truth starts to hit home that Brexit is going to cause job losses, certainly a weakened UK economy, and that's really not what sort of people signed up for. And quite interesting as well, people who were being interviewed had voted for Brexit, but weren't really clear on the facts. They were sold a bit of a sort of hodgepodge of sort of stories and lies. And that's really not going to be how it's going to pan through come March 2019. Well, there has been a little bit of softening from the EU, talking about potentially sort of extending that sort of March 2019 sort of deadline and having a little bit more of a sort of a transitory period as they sort of try and work through a deal. Also as well, the big news in Europe is that the EU has sort of flatly rejected the latest Italian budget, and that's now going to be interesting to see really how that sort of plays through, as those sort of Italy and the EU sort of lock horns on their budget proposals. Here in New Zealand, it's been a pretty disastrous week for the National Party. Labour's really, come out of it pretty well in terms of the sort of latest polls. New Zealand economy sort of pushing on, and again at a reasonable rate, and it's just going to be interesting to see how this sort of plays through coming into the sort of summer period. Obviously, tourism will be a pretty major player. Also quite interesting as well in the latest surveys that sort of most areas of New Zealand grew. Obviously, Auckland was really the big gainer there, up around sort of 30%. So obviously that still puts pressure on the housing, and certainly the government's housing policy, really has failed to deliver so far, and it's just going to be interesting to see again how that sort of plays through over the next sort of 3 to 6 months. Mycoplasma bovis has been pretty quiet as well in terms of sort of the government's policies to try to eradicate that. Haven't really seen how that's sort of going yet. It's just going to be interesting to see how that sort of plays through, because certainly they're sort of throwing quite a bit of money at it. So the interest rates don't seem to be increasing here much in New Zealand. Fixed interest is still running around a sort of a 5 to 7 year sort of term, and looking for an interest rate of around that sort of 4%, maybe 4.2, 4.3 if you're lucky. Most are sort of around 4%. Now, as usual, if you are looking for income options, there are plenty of alternatives available out there. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.